moving on into our trading idea of the day. Let's start the first one would be Delium. So Delium is actually our recent buy on 18 January, as the stock is actually gaining about 11.7% to peak at 1 ringgit and 15 cent, which is to be higher than our first target of 1 ringgit 13 cent. So what make it interesting in the subsequent consolidation, so the stock is pretty much building a new baseline right above this 33-day moving average. As you can tell that the stock also forming a new higher structure. So while the baseline has been created within this current level, we think there's a decent chance for the uptrend to continue, particularly as the stock, RSI also has started building up, rising above the 50-point mark again. So uptrend still pretty much intact. We are waiting for the positive buying follow through that could lift the stock pretty much higher to a 1 ringgit 18 cent, which is our first target, new and higher target, and 1 ringgit 32 cent, with our stop loss also has been revised higher from 93.5 cent to 98.5 cent, giving you a quite decent risk to reward ratio with close to 8% risk, but 33.4% upside potential. So risk to reward ratio is about 1 to 2.9, or close to 1 to 3, while the quant scoring for this one will be similar, will be value with the quant score of 8.4. Right, now moving on into the second stock will be CloudPoint. So the CloudPoint, one of the reasons why we highlight, we did saw a move on last Thursday. However, we want to wait more for much more a solid, or we call it a breakout move, which is actually occur the next day, which is on last Friday. So this solid breakout move, I think, has pretty much kickstart a new up cycle. So if you look on the bigger time frame, you will see on the weekly chart, this is actually a solid breakout move on the weekly chart level as well, on the back of higher trading volume. So this genuine breakout is actually kind of kickstart a new up cycle, as we expect, putting the end of the recent downtrend move. So the stock has gap up, create a solid breakout move on the back of high trading volume and momentum. Of course, RSI and D trend also has, because there is what we call a similar reading. What makes it another interesting level where this D trend line now is actually breaking up above zero level, which is something that we haven't seen since October last year. So because of that, this give you quite a strong indication that the new up cycle has started to emerge, and we're expecting the new uptrend to continue, trading much higher. It could take time eventually, but we put our next technical target at 63 cent and 73.5 cent, 1 bit below of the major high at 74 cent. So in terms of the risk and reward, it can be a little bit on the risky side, about 10% downside risk, but the upside appear to be about 30%. So it's quite decent risk to reward ratio. You can accumulate within the 54.5 cent to 56.5 cent. Any pullback will be deemed as a good idea for reaccumulation. But as long as support at 50.5 cent remain intact, we're expecting the uptrend to continue upward. So that's for the stock. So CloudPoint doesn't have the quant scoring, as the stock not under any coverage. Last but not least will be TH Plantation. So what we like about TH Plantation is the stock, we call that recent downtrend move within this downtrend line since March last year has pretty much ended, as the stock has created a solid breakout move on 29 January. So what follow on 29 January is a classic, we call that a return move. A return move means the stock fresh breakout, making a pullback and rebounded again. So that means a return move has been completed, as the stock coming back to what is level where it's actually break before that. So completing the return move and create a new higher structure. So this is only can be considered as another 1 to 3 pattern. Often is actually a standard pattern when the stock is actually starting a new wave 3 kind of movement. So regardless, I think in terms of overall trend structure over here, momentum is actually pretty much strong. D trend also pretty solid. we've seen a hint of spike if in terms of the trading volume that could actually continue to push the stock price higher. So risk to reward ratio is about close to 8% downside risk, while upside will be pegged at 20% upside. So we think is quite attractive at 1 to 2.6 risk to reward ratio, with the net resistance level is pegged at 62 cent and 68 cent, while the cut level will be below 52 cent.